Hey everybody, it's Jason from Modern Money Method, and wanted to come to you with a quick spring update here and my thoughts on the housing market in the Pacific Northwest. Uh, this past week, the NMLS came out with their March report, and I'll point out a couple highlights on here, but if you want to read it in detail, you can go there yourself. They do a monthly update, and you can see the web address in the browser there. I'll just point out some important things. And one of them is in March, brokers added 7,904 new listings, down 30% from a year ago. This number just keeps amazing me that out here we can keep having these very low listing numbers. They are up 51% from February, which was crazy low in February, brought our months of inventory way down again. And we'll hop down here. They talk about a lot of different markets, but I just want to focus on all of them together. At the end of March, there was 8,007 active listings in the MLS database, up more than 73% from a year ago. That's just an incredible number. So nearly doubling. If you remember, last year was the crazy year where we had 2 weeks of inventory, which just made bidding frenzies, people paying 50, 100,000, even more over asking price. And I do apologize about my voice. I have a little bit of a head cold going on today. Right now, so we've come back down. We were at 2 months inventory there, and we're back to 1.38. I thought we would be staying above 2 months inventory and maybe creeping up to 3. Doesn't look like that's going to happen. In fact, even Pierce, Snohomish, and Thurston all have less than 1 month supply. And we get down here. Here's an interesting line. While the inventory in King, Snohomish, and Pierce counties grew 14% from February, that's expected because February is a short month, and also it's still wintry. The number of homes for sale in this Tri-County area is down 40% when compared to March of 2019. I have a theory that this is not going to go on forever. Obviously, many things changed in the last 3 years, but 2019 was pretty normal year, and so if inventory was to double again from here, which I think it's going to happen, I don't know exactly the time frame, we will stop seeing these insane bidding wars on the housing. People made decisions and didn't want to make decisions. I know a lot of people who have houses that they really should be selling. They're spending very little time there, either because it's paid off or they have a very low mortgage payment, but they're spending the majority of their time somewhere else. But a lot of these people are starting to talk about getting their house ready to be sold. So, like I said, I think the listing number is going to start climbing here soon. Pending sales jumped 14% from February, rising to 6,230. Compared to a year ago, they're still down 29%. Another huge number. Listings down and pendings down. Like I said, there's a lot of stuff you can read in here in detail about different counties, but I want to hop down here and show you some really important stuff. What we have here, once again, you can see we had that crazy low inventory a year ago. It's still crazy low. Look at this. We are below 1 month in some counties. King County is over 1 month. We do have some in the 2s. But what I want you to focus on here is we have the median closed price. And these are the 3 big counties that I like to track. They do the majority of the business, 70-80% of all sales every month occur in there. And let's actually hop over to that. So look what we have going on, folks. We have, this is median sales price for King, Snohomish, and Pierce County. And what I want to show you here is something very important. After last spring's run-up, where King hit 880, Snohomish hit 800, and Pierce hit 575, a whole year later, we are still down. In Snohomish, we're down about 15% still. We have climbed from the January lows. King County, we have climbed from the January lows. We're still down about 11%. And in Pierce County, after hitting a high of 575, we are down about 9% from the spring of 2022 peak. Now, if listings were to come on and interest rates stay up and sales prices stay stagnant, excuse me here, I thought I was going to sneeze. Something interesting is going to happen. We run the risk of this summer, June and July of 2023. Look at these median prices in 2021 here. We're barely over these prices right now. We're at them or just barely over them. We run the chance of being 2 years from 2023 to 2021 with no price gain over that period. They ran up and then came back down. So that's something I'm watching. All right, we hop back over here. I've got something very important to show you guys. As you know, I'm a statistics major and I'm just a numbers geek. And I want to show you something that I think is very important that's getting ready to happen or has happened. I've talked to you for the past year and a half about it. And want to show you something here. So right here we have March. This is the calendar months. And then we have the years here. And I want to show you something. March is when it really starts heating up for our sales down here. And I want to show you something. If you remember, I was predicting that we'd really drop off last winter, which we did. Got down to crazy numbers of pending transactions. But we had another surprise, in my opinion. So in 2023, here's our January number, 4,111. February number, 4,402. March, 4,951. Look at this March column, and what do you see here? You see a lot of numbers starting with a 7 and an 8. In 2021, there was 8,002. And in 2022, 7,300. We did not breach the 5,000 number. And why this is important is, if you go back here 20 years, you can see that 20 years ago when our population was quite a bit less, we were still doing 8,000 transactions, pendings, in March until 2008, where the numbers started being very low, and we did not have a recovery summer that year. And then when we came back the following year, 2009, we had another year below 5,000. We had 4,520 and 4,262. So in 2007, we had 7,192. And in 2008, we had 4,520. This was right about the start of the housing market collapse that occurred here in our region. And another signal was that was our first time below 3,000 in December. Well, let's come down and look at what we're talking about here. So like I said, let's just look at this real quick. 2006, we had 8,100 in March, 7,100, 4,500. Remember those numbers. Look at this. 8,000, 7,300, 4,900. They're not exact, but boy, that sure is a trend there that's looking very similar. And this big signal that I felt we had was this December year here. So although we're experiencing in a spring where sales and activity is going up, it is not going up at the normal rate that it has in the past. Let's just go to 2019. There was 4,900 transactions in February, 7,500 in March. That's a 50% jump. Do you see how we only had a 10% jump right here? I was predicting, if you remember, late 2021, that all the 2022 numbers would be below, which they were. I think we may see a 2023 below 2022. If I could bet on it, I would bet on it. So just something to keep your eye on. Obviously, inflation and wage pressure is not going to allow the housing collapse to play out like it did last time. But I think there's going to be a transaction slowdown that is quite dramatic. So thank you guys for coming in and listening to what I have to say. And see you guys next time.